Hi, everyone. Thanks for joining us. Sorry for the technical difficulties and the late start. My name is Stephanie Hunnell from the Hunnell Law Group. I'm here with Evan Beach from Equity Prime Mortgage. We'd like to talk to you a little bit about the mortgage relief being discussed by the governor. Before we begin, I want to make sure everybody understands that this mortgage relief is not an executive order. It is simply an initiative between the state of New Jersey and various lending institutions where they have an agreement essentially that the banks are going to do four things. They're going to give you a 90-day grace period for mortgage payments. They're going to give you relief from fees and charges for 90 days, so no late fees. They're going to not initiate new foreclosures for at least 60 days, and they're not going to have any negative impact or credit reporting on your credit score. So, Evan, would you like to tell us a little bit about your background?
Sure. Thanks for having me, Stephanie. My name is Evan Beach with Equity Prime Mortgage. I'm a mortgage professional, and I say mortgage professional, not like my normal title, which is mortgage loan originator, because of the fact that when you're going to get your car fixed, you go to a mechanic. When you're going to you need your taxes done, you go to an accountant. When you need legal representation, you go to Stephanie or your local attorney. Same thing with mortgages. When you do need a mortgage professional, that's what we're here to do. That is the world that we live in. I've been in the business, roughly just over 15 years. Started in around 2004, so I've seen a lot of things come and go as far as regulations. And back in the wild west, as I like to call it, pre 2008, 2009. So I've seen it all. So in this climate, we're used to this. As crazy as that sounds, we're built for this. So yeah, appreciate you having me.
Yeah, glad you're here. So why don't we just jump right into this? And I would like to know what this grace period or forbearance actually means for the borrowers.
Sure. So really the thing that people need to understand, and you mentioned grace period, you mentioned forgiveness. We really need to stay away from that verbiage. And what I mean by that is this is a forbearance plan. And forbearance is not forgiveness. It is not relief. It is simply pushing back money that is going to be owed. So it's also very important. It's not a deferment. And just this morning on CNBC, they were talking about this program, talking about it being a deferment. It's not a deferment. A deferment would be, okay, let's say your mortgage payment is $2,000 a month and you're not going to pay it for 90 days. You're not going to pay it for 3 months. That's $6,000 that has to go somewhere. They're not just letting it vanish into thin air. What they're doing, it's not deferment. Deferment would be putting it on the back end of the mortgage. Forbearance simply means that they are pushing back the payments. So what's going to happen is if somebody doesn't pay their mortgage for 3 months, or I shouldn't say doesn't pay, they go into this forbearance program. What's going to happen after that 3 months remains to be seen. Is the mortgage servicers, the mortgage lender, then going to just simply ask for a balloon payment? Are they going to ask for the $6,000? Or are they going to then turn around and say, okay, we're going to stretch out that $6,000 over a 1-year period? We just don't know how they're going to react to that just yet. But people need to understand it is not, just get out of jail free card. It's very important. Forbearance is not, they're not just forgiving 3 months of mortgage payments. So it's something that people really need to understand. And they're giving a lot of disinformation that's out there right now. So I heard just yesterday, Caliber, which is one of the huge servicing companies for mortgages, received 8,000 phone calls yesterday for asking for forbearance requests and asking for get out of jail free cards. Basically, 8,000 people in a day for one servicer. So obviously, people are going to try to take advantage of this, even people that may not need it. And again, I can elaborate on that a little bit.
How in terms of the lending, I guess what the terms of this forbearance are going to be? I keep wanting to call it something else.
As far as the terms of it,
Mm-hmm.
I mean, the way that they're asking people to go about it is to contact your service or contact your whoever you are currently making your mortgage payments to, and they're asking you to call and set up a forbearance agreement, basically. So whether that be 30 days, 60 days, 90 days, whatever the case is, you have to set that up with them. That's the other thing people need to realize. You can't just stop making mortgage payments. I mean, I guess you can, but it's not gonna help you in the long run. You need to
Right.
set up some type of agreement. But again, very important. People need to understand this isn't just complete relief. And again, I can pull up the basically the draft that they had sent out that is uses verbiage that just should not be used. And the other thing you got to keep in mind in New Jersey, this is all over the country. This is an election year, so they are going to pump out
Right.
this information so they can say, "Hey, we gave you relief in the time of need. Vote for me now." So again,
Right.
very very important to keep that in mind too. Um, but as far as the terms, this is a very fluid situation right now. This just came out in the last few days here. They're asking people to contact their servicers and work out a forbearance agreement. But again, we have to approach it from a financial look at this and say, does it make sense for you to go into a forbearance agreement? Again, they had the stimulus package that's coming out where a, a couple that owns a home, even without children, are going to receive $2,400 a month. In addition to, if they lost their jobs, they're going to now get the new unemployment package, which is another $600 on top of the normal unemployment. So the thought is, and also keep in mind, bills are, as crazy as it is, bills are going to go down now. People aren't going out to eat anymore. You're cooking all your
Right.
meals at home. People aren't going out. You can't go to the movies. You can't go to a bar. Another big one is if you have kids. I have two young kids. I spent close to $2,000 a month on daycare, which is now gone.
Mhm.
Again, it's a nightmare having them both at home, but that is now gone. So there's $2,000 a month, and I'm just using myself as an example. That's $2,000 a month that now is basically money that's income in the home that theoretically can be used to pay bills that you have to pay. First one being a mortgage. So,
Right.
we have to approach it from a financial standpoint too. And people need to understand there's going to be a lot of people it does not make any financial sense to go into any forbearance agreement. It's going to be detrimental
Right.
to them to do that. And they're
So
going to be jeopardizing. Go ahead.
no, I was just thinking. I had literally having a conversation of maybe 20 minutes ago where somebody was saying, well, this is a great thing because everything is tacked on to the end. So I wanted to just dovetail on your comment about the election cycle and the governor maybe saying that everything is going to be tacked on in the end, or these are the talking points. But in reality, the second thing that the governor said was you need to talk to your specific lender about any information regarding exactly what you qualify for. I also heard from somebody that at one of the local banks is exactly what you said. 12 months is when they expect to have the entire forbearance period paid off.
Yep. Yeah, absolutely. So, look at it that way, and just, in some simple math. I mean, if your mortgage payment is $2,000 a month, and you're going to skip, let's call it 3 months. That's going to be, again, using very simple math, that's going to be 6 grand that you are still going to owe. It is not forgiven. It's forbearance. They're going to want that money. Now, how they want that money, again, is going to remain to be seen. But to go off of your point there, if it's going to be a 12-month repayment period, then you're talking about, all of a sudden, they're going to be now paying $500 a month more for the next year. So
Right.
whereas, and again, it's going to happen to a lot of people. It's going to happen where people believe that it's just forgiven. And then all of a sudden their lender, their servicer is going to come back and say, hey, we let you slide for 6 grand. We want that money back now. And
Mhm.
all of a sudden you're going to have these jacked up mortgage payments, and people are going to have their hands in the air like, oh, we didn't know this.
Right.
So again, it makes sense if you have the financial ability. Now, again, I would never tell anybody not to feed their family, feed their kids, take care of what you need to take care of. But a mortgage payment is right up there with very important bills that you need to pay.
Right.
I mean, you
Uh,
can, you can not pay electric and cable and things like that, and they'll get shut off, but don't pay your mortgage, obviously you're not going to have a place for the electric to go to. So
right.
again, we would never advise, and that's why I'm very, being very strict on this. It's going to be a case by case financial situation, but people need to realize that if you have the ability to pay your mortgage, please pay your mortgage, because the money's not, vanishing into thin air,
Right.
basically, is how you have to look at it.
Right. And then after that, the 3-month period, even if they're not charging your late fees, they're not going forward with foreclosure, which I think we'll talk a little bit about more later on. After that 3-month period, they're going to start charging late fees. If you can't pay that extra 500, you're going to get in trouble. And there's no guarantee that they're going to take partial payments or any other workaround after the 3 months is expired, right?
Yeah, absolutely. I mean, this is going to be, we're in uncharted territory. We've never had an absolute nationwide thing like this happen so quickly. So how they're going to react to all of this being flooded in, and how they're going to try to collect their money, remains to be seen. But on another good point, that obviously the next logical question is, how is this going to affect people's credit? Um, and that also remains to be seen. They're saying it's not going to be derogatory to their credit. I can guarantee you, we at the end of this year, we're going to have a landslide of people that their credit scores are going to go down, because even if they say that it's not going to derogatorily affect your credit. If somebody doesn't pay a mortgage for 3 months, even if it's listed as forbearance on the credit reports, there's a gap there of no payments being made. So I'd be amazed if nobody's credit got hurt by not going on, a forbearance program. So,
Which
again, a lot of disinformation going around with that too.
Which then I'm guessing would that also impact? I shouldn't guess. I'm going to ask you. Would that impact a person's ability to refinance in the future or purchase in the future?
100%, absolutely. If trying to, and again, not to launch into a whole credit seminar, but trying to repair credit that's damaged, even if it was of no fault of the client or the borrower, and even if we have proof from even a letter from a servicer stating that it's not going to affect your credit, trying to go back and repair credit, even if, when we're very good at doing it, even if we're able to do it, it may take 60 days for somebody's credit to be repaired from something like that. So again, the recurring theme is if you don't have to go into the forbearance programs, don't. This should be a last resort, and that's how they should be. That's the narrative that should be being pumped out there, not this blanket parachute of, hey, yeah, we're here for you. We're gonna cover your mortgage payments for 3 months. It couldn't be further from the truth from what the narrative that's going on out there. So this should be a last resort for people. If you have the financial wherewithal to pay your mortgage, and again, a lot of people should be able to, because of the fact that, again, the stimulus packages, the pumped up unemployment, the less bills across the board. No, there's nothing really to, I shouldn't say there's nothing to spend your money on, because certainly anybody can go on. Anybody can poke around on Amazon and go and drop $1,000 in a heartbeat, but the regular bills just simply aren't going to be there. The daycare, the going out to eat, all that stuff wrapped up into your daily, your, I don't even want to say daily activities, because obviously we're talking about monthly activities now.
Right.
So again, if you have the ability to pay the mortgage, you're not going to get yourself into that potential unknowns down the road. Even if this goes smoothly and they say, yeah, forbearance is fine, it's not going to hurt credit, all that stuff, the bottom line is that the servicers are still going to want to collect their money at some point. So why backlog yourself if you don't have to,
Right.
and jeopardize, potentially future equity in the property?
From a legal standpoint, I also want to make sure that everybody understands, if they do decide to go forward with this, or they really they need to contact their lender, and whatever the terms are that are communicated to them, get it in writing, get an email, get something in writing just to confirm whatever the repayment terms are going to be. So you're not surprised at the end of the 3 months when they say, okay, day 91, you owe a lump sum payment or something. So just make sure you get it in writing. Evan, I also wanted to ask you about refinances. So I know maybe some people want to adjust their mortgages and save a little bit of money on refis. I know in February the rates, or like, early February, the rates were pretty good, and there was a huge rush. I got a lot of calls about refinances. How has the stay-at-home order, COVID-19, how has that changed for the refis?
Sure. Well, that's kind of a twofold situation. Um, Refis are still, very prevalent. The obviously, what happens now is that people that could have refied a month ago may now be unfortunately unemployed or furloughed or laid off. So that can affect their qualifications to actually to do a refi.
Mhm.
The next kind of point of this would be, does it make sense to do a refi, and can we show benefit by doing a refi? Because the only reasons you'd be doing a refi typically would be to obviously to lower your interest rate, to lower your um,
Sorry,
to
I got a
lower,
cat.
no problem. Would be to lower your lower your interest rate, lower your payment, or to potentially do some type of a cash out situation.
Mhm.
Uh, so the goals of the refi still would be the same, but it's a matter of if we can now perform the refi if someone still is employed. If they are still employed, hopefully, uh, then it gets into a question of obviously where interest rates are, and I can launch into that in a few minutes because I have some graphs and some things I can run through.
Mhm.
But rates have been all over the map. Excuse me, in the last 3 weeks since this whole thing kind of took off. It's been as volatile as we've ever seen in the history of
Right.
mortgages and finance. So, uh,
Right.
and again, I can show obviously show that in black and white in a little bit, but yeah, the short answer is yes, we are still refining people. We are still closing. It is still business as usual for us, as usual can be. A lot of the referral partners that we work with, obviously like yourself, attorneys, title companies, um, have been very accommodating, trying to do closings, do distant closings, do even virtual closings. So I had 2 purchases closed yesterday. There's another 4 or 5 refis that we're closing this week as well. So we're still very busy. We're built for something like this. So we're in this environment, we're, I hate to say the word thriving, but we're as busy as we've ever been. Now, obviously, depending upon where interest rates are, uh, normally I would say in a certain day, but we're talking about on an hourly basis right now.
Wow.
Uh, can affect if it makes sense for somebody to refi or not. So along the lines of refis, what we're doing right now is basically talking about potential benefit for a refi. So if somebody, to give a very basic example, if somebody is at 4.5%, and we believe that we can get them to 3.5%, even though rates may not be at 3.5% this hour, this day, we're getting applications in. We're talking about that potential benefit, and then when rates do get to that certain threshold, depending upon a day, if it bounces, at that point we're just clicking a mouse, locking, and getting it moving. So yes, the refis are still very prevalent, in this market, and for a lot of people, they might make more sense more than ever. Uh, Especially if there's going to be nobody that's not affected by this in some way, shape, or form financially. Even if you are still working, a lot of people had to take 10%, 20%, 30% pay cuts. So, obviously a refi may now be more in their wheelhouse to try to save every single penny that they can, and potentially, do some cash out or do some other creative things that we can do refi wise.
How long is the refi process taking, do you think, right now? Is the time frame extended because of, like, I know, I mean, title companies are taking a little bit longer. Things are closed, courts are closed.
Right.
So what's the average time, do you think, to take care of that?
It depends on the situation. I mean, a lot of the title companies we've been working with have been great, and we haven't seen major delays again just yet. Uh, it's naive to think that we're not going to see some type of delays, so we're planning on that. So it really comes down to with refis, and I should say with purchases too, but it comes down to the length of the rate lock that we're taking. Whereas in a normal market, you know, it's crazy. It sounds a normal market way back when a month ago.
Mhm.
Um, we could potentially, normally we do rate locks or refis, 45-day rate locks, sometimes 30-day rate locks. So we're adjusting our rate lock period for refis right now. We're typically taking at a minimum 60-day rate locks, which allows for, any delays that we may see, like you mentioned, if courts are closed and they're having trouble doing title searches, tax searches, things like that on refis. But with refis, the good thing is that it's pretty streamlined because all we really need is tax and title work and an appraisal. Not to launch into the whole appraisal issue, but uh, they're allowing more and more drive-by appraisals. We're getting a lot of what's called PIW, property inspection waivers, where we might not even need appraisals.
Mhm.
So with refis, theoretically they're easier to do than purchases, because purchases, you have a lot more moving parts. You're going to need, typically, we don't require them, but you're going to need COs normally. You're going to need inspections, and these are all things that are affected by, depending upon the county and the municipality, that are getting delayed because of that. So, as far as the processing and closing of a refi, it's more so the importance of getting the benefit locked in and getting a rate locked in that makes sense for each and every client. And then we're doing a longer term rate lock, and basically we'll close it when we can close it. So as long as we have that benefit locked in, that's the important thing. And the
Mhm.
other thing too is, purchases always have to take priority over refis, because purchases are very time sensitive. You have a
Mhm.
contract, there's a commitment date on there, there's a closing date on there that we are very, stringent and strive to hit. So, purchases always have to take priority. But again, with refis, it's a matter of getting the benefit locked in and closing it, as soon as we can close it in a timely fashion that makes sense.
Okay.
Um, so
Okay. What can you tell us about interest rates? So, when we're looking at the Fed reducing the rate to zero, is that having any impact on what our mortgage interest rates are going to be, whether you're buying or refinancing?
great question. And I got 37 texts about that on that Sunday 2 weeks ago when the Fed dropped it magically to zero. And what I can tell you is that it has zero correlation to mortgage rates. There is no correlation between what the Fed did with their rate and where mortgage rates are falling. Typically, mortgage rates, and again, I say typically because we're in uncharted territory, and I'll explain what I mean. Um, Normally, what would affect mortgage rates more than anything would be where the 10-year Treasury note is, or where mortgage-backed securities in general are. And I can pull up some graphs and show you what I mean, but that has way more of an effect than anything to do with the Fed. But what we're seeing now is things are very jumbled up because of where the service market lies right now. So what we're seeing basically is there was a very high demand for mortgages and not a lot of homes for mortgages in the service department. And this goes back to, again, the forbearance issue too. Servicers are scared to death to take on any new servicing rights for mortgages right now. So typically, a mortgage originator like myself and my company, we're a mortgage bank, we're mortgage originators, but normally a servicer would take over servicing rights to a mortgage. For instance, obviously you did a mortgage with us. You're not making your mortgage payments to us.
Right.
You're making them to a servicer. So there's a handful of servicers throughout the country that make up a huge portion of the servicing rights. So there's 6 or 7 of them that make up 70-80% of the service market. So there's not a ton of them out there. But what they're saying basically is, with everything going on, they're scared to death to buy servicing rights from us. So the way that we would profit in any transaction would be through charging any type of fees, origination fees, application fees, points, buy downs, whatever you want to call them, or through the premium that we would get from a servicer taking over the rights.
Mhm.
Now, what's happened is that premium has all but disappeared in the last week to 2 weeks here, because servicers simply don't want to take on any more. They don't want to purchase any more servicing rights. So the way you look at it is, we're fishermen and we're out there and we're fishing and we're fishing. We come back to shore and we have a giant boat full of fish, and as weird as this sounds, all the restaurants are closed and nobody wants to buy the fish.
Mhm.
So that's kind of how the what's going on with the mortgage industry right now is that's what's really skewing rates, and
Mhm.
where rates should be at all-time lows with all the other financial data going on, we're not seeing it. We're seeing rates back to basically regressing where they were at the end of last year.
Oh.
So, now the thought is that the government's been stepping in at every step of the way here to to support the mortgage industry and the real estate industry, uh,
Mhm.
mainly because of, and this is a very important thing, that uh, this isn't 2008, 2009, and for the sheer fact that this isn't our fault. And what I mean by that is 2008, 2009 was strictly the mortgage and real estate industry's fault. There was faulty mortgages going on. There was people getting lent money that had no business being lent $10, let alone $500,000.
Mhm.
There were faulty appraisals, fake appraisals. Home values were completely fake, which
Mhm.
caused everything to collapse. Today, this is not our fault. This is strictly from the virus.
Mhm.
That's all there is to it. So the government has been very supportive, coming in and bailing out, basically a lot of the mortgage industry and buying mortgage-backed securities, which again I'll show you in the chart. But they haven't bailed out the servicers yet. So we haven't been able to, in turn, profit on transactions like we would normally be able to,
Mhm.
which means rates are going to go up. So that's kind of where we're at now. Now, the thought is the government's going to step in and eventually have to bail out the mortgage service industry, which would then revert everything back to where we were, ideally 3-4 weeks ago, where rates should, obviously pinball back down a little bit. But,
Mhm.
again, no one has a crystal ball in this environment. So we're just, taking it as it goes.
I mean, I would suspect that just the thought that these next 3 months, potentially people might not be paying their mortgages would make the servicers not interested at all in buying these mortgages.
Again, another great point is that exactly is that if look at it from the standpoint, if you're a big servicer and you're the way that you make your money is buying mortgages off mortgage originators and collecting payments from them. If you now see this forbearance thing come out and you realize, hey, wait a second, I'm now not going to receive maybe the first three payments on a mortgage that's originated, why in the world would I ever want to get in that business? That's not good business.
Mhm.
So that's part of the problem too, is that their demand has gone, the demand's gone way up. So the cost, the profit on these transactions has gone way down, which again allows rates to rise. As
Mhm.
crazy as that sounds. So in short, really, the Fed has no bearing on anything as far as the Fed rate, I should say, has no bearing on anything as far as the mortgage rate world. In fact, after that happened, that week was awful interest rate wise. I mean, we saw rates climbing into the high fours, scraping 5%. So,
Mm.
not a direct correlation.
Okay. Um, did you want to hit? You mentioned a chart a couple times. I don't know if you want to hit on that chart, or do you want to talk about foreclosures next?
I mean, we can jump into foreclosures, and I can show kind of give everybody an idea of how rates work and kind of where we're at.
Okay.
For foreclosures, I mean, I'll leave that up to you, because obviously that gets into a very much a legal issue.
Okay.
But yeah, I mean, as far as foreclosures go, again, that's going to massively affect the servicing industry. You know,
Mhm.
so
So one of the things that Murphy was saying is that there's going to be a 60-day moratorium essentially on foreclosures. When I went in and I read Executive Order 106, it says that the residential foreclosures are, quote, going to be there's a moratorium for no more than 2 months following the end of the public health emergency. But the banks are still allowed to file new foreclosures, meaning
okay.
that they're only going to stay if you get a judgment or if there's a motion or something like that pending in court. So it if everybody just does what they're supposed to do, and this to me, this is like the equivalent of a handshake deal with these banks. There's no contract, there's nothing requiring them to do what they're saying they're going to do. It's like a handshake deal. And as long as everybody does what they say they're going to do, I think everybody should be okay with the foreclosure issue. But if the bank decided to file a foreclosure action, there's not really any recourse to prevent them from doing it. The only thing that you can stop is the actual eviction and the sheriff's sale and getting kicked out of your house. It's the same thing that applies for rent. So that's why I said eviction as well. So I just want to make sure people understand that as well. I don't want people to again think that just not paying your mortgage, there's a free for all. You don't have to worry about foreclosure. Practically speaking, the courts are closed and they're not really processing any of these applications. It's not a priority for the court, at least through April 26th, I believe, that they're not going to be taking these motions and processing foreclosure judgments. But right after Monday, April 27th, we have no idea what's going to happen. And the banks can run in there and move for a foreclosure and sheriff's sale. So I just want to make sure that people understand that piece of it as well. And I think that applies to renters as well. So with the evictions, and I'll just touch on it quickly, again, they're not going to kick people out of their house during this time period, but there's nothing to stop them from having a landlord go in and enforce their rights. So if you get a complaint for either foreclosure or an eviction, you need to respond to those complaints and take care of what you need to take care of. Don't think that just because somebody on TV told you didn't have to do it, you don't have to do it.
Great. Yeah, I mean, great point. And to touch on the foreclosure issue too, and also people have to understand that if you're in the process of getting to the point of foreclosure too, there was a much bigger problem prior to the virus madness that's happened
Right.
over the last 3 weeks. I mean, foreclosures can take, and I'll let you elaborate on how long they're going to take, but I mean, foreclosures typically, I mean, you're not paying your mortgage for a very, very long time. So there was problems way prior to the virus coming into effect, so that obviously saying that there's going to be foreclosures, I mean, it's almost like it's a catch-22. You want to do a forbearance to eliminate foreclosures down the road, but for somebody to be in that position of in the process of going through a foreclosure, the Band-Aid was already ripped off. That was a big problem 3-4 months ago. Not just because of the virus.
Right.
So
We have a question. It's, are landlords' rights different in each state? So yes, landlords' rights are different in each state. And I want to make sure everybody that's listening understands that we are just talking about New Jersey. So we're talking about the executive orders with regard to the foreclosures for New Jersey. We're talking about the agreement between the state of New Jersey and different lending institutions as far as the forbearance period, the 90-day forbearance period. This has nothing to do with any federal rules that might come out in the future. I know there's some talk with Freddie Mac regarding some similar stays, but we're just really talking about New Jersey right now. If you'd like to touch, we didn't really discuss this before, Evan, but if you know about the Freddie Mac criteria, I only read about it just a tiny little bit. So if you have any information about that, I'm happy to hear it.
as far as what exactly?
I read an article that Freddie Mac is also looking to do some type of forbearance, and I keep wanting to call it a grace period, but they are trying to work to put some plans in place to help people that might not be able to pay their mortgages.
Right. I mean, and that reverts back to the same thing as the servicers, wherever you're making your mortgage payment to. Freddie Mac is a government entity, but it all comes back to contacting whoever you're making your mortgage payment to. Again, if you need to do that, if you need to go down that road, then certainly, like you mentioned, very important that you get all that stuff in writing, get an agreement in writing. If you have to go down that road, if you truly have no ability to make a mortgage payment, and you're going to be late, or you're going to be 2 months or 3 months late, then then contact your servicer and see what can be worked out. Get something in writing. Very important, because you mentioned, handshake deals don't mean anything, especially in this environment. we're not going to see the real ramifications of this for probably 2, 3, 4, 5 months till the end of this year,
Right.
when we're going to see how this really all shakes out. When
Hmm.
how many people actually, again, I don't want to say took advantage of it, but there are going to be people that take advantage of it that did not need to, and then it could really come back to bite them, when that money is brought due.
Right. Right. We have to make smart decisions right now. And I think we just have to try not to do things that are knee jerk and think that we're going to do the right thing now without looking at what's going to happen 12 months from now. So I think that's really important. This is why I wanted to do this, because I want people to have this information and not just think that because we're told that this is going to help save us. I personally don't find it to be as much relief as everybody's making it seem on TV and on the news. When I'm reading through all these things, it's actually very scary that people believe that this is going to save them, when it might even get them in worse trouble.
No doubt. I think there's no question that it's going to probably put them in worse trouble. Now, again, everybody's financial situation is different, and you have to look at your own personal finances. But if there's a way to pay the mortgage, because it's not going away, and that's what is maddening about the verbiage that they use. And I can pull up as I said, the letter that came out that we went over prior, Stephanie. But um, saying that it's relief, and saying that there's 90 days you don't have to make a payment is just, it's 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 so irresponsible. It's not even funny.
Mhm,
And again, they were talking about on CNBC this morning, saying that it was a deferment. It's not a
mhm,
deferment. They're
mhm.
they're flat out not. It's disinformation. It's not correct, and
Right,
it can throw the market into a complete tailspin if they don't correct this, because people need to understand that it's not a deferment. It's a forbearance. There's a very
mhm,
big difference.
right. And I think on their website, it actually calls it a grace period, which is where I got that language from. Hmm.
Yeah,
Yeah.
I know, but
Yeah.
it's not. I mean, just by the definition of it. Again, I'll pull up the definition of
Yeah.
forbearance. It's not a grace period. It's
Right,
somebody just saying, hey, I know you're going through tough times, but pay me the money that you owe me when you can pay me, and that's what it's coming down to. It's not. They're not magically throwing away 90 days of mortgage payments. I mean, imagine what that would do to
right,
the mortgage service world. I mean, imagine just millions and billions of dollars just magically
right.
being whisked away. So unless the government stepped in and said that they're covering, they're going to do another stimulus package to cover
Those 90
those
days. Yeah.
90 days, it's forbearance. It's getting, it's going to get put on, as like I said, as a balloon payment, as an adjustment to your current mortgage payment. So it's, do you want to pay now or do you want to pay later?
Right. Plus the
And
interest as well. I mean, it's only 3 months, but the interest is still there. Although they're not charging the late fees, you still have the interest, whether it's
sure,
tacked on at the end or when you have to pay it over a 12-month period.
no doubt, absolutely.
Mm. Um, what is one of the questions I got was what's one of the biggest obstacles that the coronavirus has posed on new applicants?
On new applicants, I mean, it depends on, if it's purchase or refi.
Mhm.
But
Let's talk
as
purchase.
I mean, they're, quite honestly, I mean, we're doing everything like we would normally do. As
Mhm.
far as applications, the only obvious, goes without saying, is that if somebody had a pay cut of some sort, or currently is furloughed, if somebody's in the restaurant business, and they flat out got told they don't have a job for at least a month,
Mhm.
then yeah, I mean, we are going to have to wait until they're collecting a paycheck again to have them, kind of pre-approved, if you will, for a purchase, or just flat out approved for a refi. But as far as the obstacles in doing applications and doing things we would normally do, uh, the only kind of hurdle that we've seen, as far as getting people pre-approved, is if businesses are closed down, we're having difficulty getting proper verifications of employment.
Mhm.
So whenever anybody's applying, we have to obviously verify that they are employed there. We can't just take their word for it that
Mhm.
that they make $500,000 a year somewhere. Um, so we have to do verifications of employment, and obviously, we deal with a lot of people that are in the education business, and there's schools that are, shut down, and
Mhm.
HR departments that are shut down, and those are the people that normally would be filling out the verifications of employment, sending them back to us. So that is, one of the hurdles. But as
Mhm.
far as everything else, I mean, we can still perform what we're performing normally to get somebody fully pre-approved to buy a home. I mean, we do a fully underwritten pre-approval, so we're underwriting the files up front.
Mhm.
So
Which
we're
I loved,
very
by the
thorough.
way, when you did that.
What's that?
That made it so much easier when you did that.
Exactly, exactly. So
I
look at
I
this,
wish all my
a live
clients would do the same thing.
a live client testimonial. um, but yes, we do that to alleviate any issues. Once somebody gets under contract to purchase a property, uh, to eliminate any of the speed bumps, red flags once you get under contract. Because again, once somebody gets under contract, they're going to start spending money on home inspections first, then home appraisals. So we don't want somebody throwing away $500, $1,000 if we're going to then come back to them and say, "Hey, sorry, we missed something in the pre-approval." So
Mhm.
we do everything very very thoroughly up front. But yeah, to answer the question, we don't really see anything changing on that front. It's more so the verifications of employment, if that's delayed. But again, that's going to be if somebody doesn't currently have a paycheck, then we're going to have to wait till they go back to work anyway.
Right.
And then we could get that verification of employment. So what we're doing is we're really getting everything loaded for bear for when the market kind of corrects itself and when people start going back to work. So, be it a month from now, fingers crossed, a month from
Mhm.
now,
Mhm.
um, or, if it's middle of May, June, whatever, we want to make sure we have all of our clients ready to go. So all we're doing is just plugging in that piece of the puzzle, be it a verification of employment or showing an updated paycheck or something of that nature. So they can immediately hit the ground running and just go right out and start looking at homes with their realtor. Make sure you have a good realtor. Uh, and just hit the ground running and be able to, because there is going to be, once they turn the faucet back on, so to speak, and people go back to work, keep in mind in real estate, we didn't have a spring market this year now. I
Right.
mean, we skipped right from the very beginning of the spring market, typically, which is, it seemed like this year the spring market hit earlier anyway,
Mhm.
but we leapfrogged almost completely over the the closing spring season, if you will, when people
Right.
are trying to close in, when school's out in May and June. I mean, that's going to be very difficult in this climate. So in my opinion, I think there's going to be a lot of people that are going to immediately start getting active again once their nerves are calm and they realize that, that the silver lining to this is that this isn't a long term. This isn't 2008,
Right.
2009, where there's all of a sudden now we got to, start the engine again and climb back somewhere to reality. Theoretically, once people start going back to work, it should correct itself. Again, naive to think we're not going to see a detriment to the economy from this, but again, it's not like there should be a good amount of the population that can go back to work. Again, once the kind of the faucet gets turned on. So that's kind of where we would stand.
Um, what kind of advice can you give people? I guess you kind of did that a little bit, but if my clients are looking to buy a house in the next 3 to 6 months, what kind of advice can you give to them?
um, if they have a mortgage currently, pay it. uh, just quite honestly, try to keep up to date on your bills. Basically, if you have the ability to pay your bills, I know things will get tight for a lot of people, but if you have the ability to pay your bills, pay your bills. So I would even recommend that. Again, if it depends on if it's a first time home buyer or not, but if somebody that's looking to upsize or move to a different area and you have a current mortgage, I would even recommend before you start calling for forbearance on your mortgage, call your credit card companies if you have a credit card, call your auto loans and ask them for a forbearance period before you go and do it with your mortgage.
Mhm.
Again, just a pointer. But as far as everybody else, they should be talking to someone like myself, a professional in what they do, and we can set those expectations properly and get the pre-approval process moving now. Everybody is correct me if I'm wrong, but I'm pretty sure everybody's home.
Yeah.
So now's the time where it might have seemed like a nuisance in the past to sit down and either talk to somebody about a mortgage application or get your documentation together and get it over to us. Now there's going to be a lot of people that have some spare time.
Hmm.
Even if you're working from home, you're not commuting to the office. So chances are there's at least an hour a day that's free now for people. So take advantage of that, and call me, call somebody from my company, and start that process now. Get the ball rolling. So when things do get back to quote unquote normal, you're already ready to rock, and
Hmm.
we can set those expectations properly for people in this time frame, and use the time productively.
Hmm.
Don't wait 2 months from now, 3 months from now, and then pick up the phone and say, hey, I see a property. I mean, we see it happen all the time, and we've preached this for 10 years. First thing you should be doing if you're looking to buy a home is talk to me
Hmm.
and get your finances in order. And also, as this moves along, whether it gets progressively better or worse, we can advise you as far as, hey, you know, yeah, try to pay this, don't pay that. Try to pay
Hmm.
this credit card down, don't pay this. You know what I mean? So we can take it from there and make sure that their credit doesn't get thrown for a tailspin as well.
Hmm. Good point. On your other point about paying your credit cards or maybe asking for forbearance, I mean, not paying your credit cards, but asking for forbearance on your credit cards or other of those, there's also this, the utility companies will as well. They will negotiate, payment plans with you. So if you wanted to call utility companies, you can figure out what the average is for the year, and they give you a set payment plan. So then it potentially can reduce the amount. I think both gas and electric do it. So that's another way to save a little bit of money. Again, I mean, I personally eat out a lot. Didn't realize how much until I've been home for 3 weeks and done a lot of dishes. But yeah, I mean, those things as well save some money. So yeah, again, I agree with you 100%. And that's why I wanted to have you on. You know, I think that this relief is not so much relief. And if you can pay your mortgage, you should.
Yeah, yeah. I mean, it's a great point. They're a great example. I mean, it kind of makes you step back, and it's scary to prior to myself having two young kids, my
Mm.
wife and I, we would step back and look at like, oh my God, how much money did we spend on food in the bar this week? It's
Yeah.
crazy. So yeah, I mean, that's another reason why talk to me, talk to somebody in my company that's a professional in what they do, and we can even set you on a plan like, hey, we look at everything as it is anyway. I mean, we have to go through all the finances, we have to go through bank statements, tax returns, everything. So we can certainly say, hey, I mean, it looks like you spent $1,500 a month on going out to restaurants. So theoretically that's a mortgage payment. you know
Right.
uh,
Do you
so
do
again,
soft pulls? Like, so if somebody was coming to you now, they don't really want to have an impact on their credit because they know they're going to not necessarily get a mortgage right away. So you can review their financials without actually dinging their credit report. Does that work at all?
no, I mean, we would just be doing a regular credit pull, and that's a big misconception too, that people have in their head, that a credit pull is going to take them from a 800 credit score to a 680. It's simply not the case. And most people that have top tier credit, and again, top tier credit is considered 740 and above. So uh, it's more advantageous to us to have a full credit report in front of us and go through it with someone.
Hmm.
And even if they're not going to buy, in a month or 2 months, at least we have a start. And we're not going to constantly repull their credit, but we would want to have a building block to go from, just so we can say, okay, because I can tell you on a daily basis, people tell me my credit's perfect, my credit's great, my credit's perfect, and we pull it, and it's not perfect,
Hmm.
to be a diplomatic way of saying it.
Right, right.
So, and again, that's why it's helpful to do this stuff now. And there might be something on there that you're unaware of that we can rectify now, rather than while you're out looking at houses and you fall in love with a property and somebody calls me and says, hey, I want to put an offer on this property. We got to do it. And then I'm pulling credit. Then there's a blemish on there that we
Right,
weren't unaware of. Let's
right.
take care of it now, you know?
Good tips. Is there anything else you want? I think we're kind of winding up. We don't really have any questions pending. So, if there's anything else you wanted to mention before we go?
No, I think we covered a great amount of info here, stuff that was certainly on topic. In lieu of running into a huge conversation about interest rates, again, I could spend an hour on that at a minimum.
Uh-huh.
And uh, so especially with where the market's at now, contact me directly, and I can walk you through the kind of the volatility of the market and
Uh-huh.
where we're at. And really, in this marketplace, it comes down to if somebody is purchasing and they have to lock an interest rate, then they might not like the interest rate they're going to lock at today. But
Right.
it's a whole nother conversation. But again, hopefully we see some greener grass on the horizon. Once they get the servicing industry sorted out, we should see rates kind of come back to earth. I don't think we're ever going to be potentially where we were 3 Mondays ago on March 9th when
Hmm.
we were hitting all-time lows. But if we can get back to some semblance of that,
Hmm.
it's going to be a healthy marketplace. And
Yeah.
we can't have it. It's not sustainable to have rates go up and down and fluctuate a point a day, which is what was happening a week ago. It
Yeah.
was just utter madness. I mean, went
Mhm.
from all-time lows to 4.5 in a matter of 2 days.
Wow.
Um, but yeah, again, I could launch into all that, but I think that I always preach to people too. It's a case by case basis. There's no such thing as cookie cutter financing when it comes to mortgages. Everybody's situation is different. So
Mhm.
it's it's maddening to me to hear radio commercials and see TV commercials or whatever from any company. I don't badmouth other mortgage companies, but XYZ mortgage company, hey, our rate's X right now. It makes
Mhm.
no sense to advertise interest rates because they're changing, especially now, so rapidly. So
Yeah.
you have to just get in a position where you're ready to lock when it makes sense and take the advice of a mortgage professional when it makes sense to lock.
Mhm.
Uh, and that's really how we have to look at interest rates right now.
Great. Good to know. I like to put a link down below just in case anybody wanted to know if their lender is one of the lenders that's in this initiative. So I'll put a link in the comments to that information. Evan, if you wanted to put a link to your contact information, that would be great as well. So if anybody had questions, I'm available if anybody has any questions about anything. If you have any questions about the forbearance, the evictions, I know some people are landlords that I saw scrolling through here that joined. So if landlords have questions, it's not really necessarily related to this, but I'm happy to answer and field some questions for people if you want to just catch this on the replay. Okay.
Sounds good.
Thanks, Evan. I appreciate you coming on.
Absolutely. Thanks for having me. I think it was very, very helpful for everyone.
Thanks. I think it was great. Take care.
All right, guys.